You've probably heard that Rachel Reeves is going to increase taxes in the budget, but how might she do that? Here are 10 things that have been floated over the past couple of months. Number 1, restricting the amount of tax-free cash you can take from a pension scheme. To be fair, that's been a rumour since I started in pensions in 1981. Number 2, restricting the ability of employers to pay benefits like pensions and childcare through a salary sacrifice scheme. That means those payments don't give rise to employer and employee national insurance contributions. Number 3, restricting the amount you can pay into an ISA. That was floated in the spring budget. Number 4, charging landlords national insurance on rental income. Number 5, asking gambling firms to pay more tax. Number 6, charging a pay per mile tax on electric vehicles. Number 7, charging VAT on taxi fares. Number 8, charging professionals like lawyers and actuaries national insurance on the income they get from limited liability partnerships. Number 9, an exit tax on people leaving the country. And number 10, probably the one that's receiving most press coverage, is the idea of 2 pence on income tax and a corresponding 2p reduction in national insurance. In her pre-budget speech, Rachel Reeves said that the budget, everybody had to contribute to the effort. And that's why I think that last option is probably very likely. It will affect pensioners quite significantly because if they have a lot of income, they'll pay the extra 2p income tax on that, but they won't get a corresponding offset on a national insurance because they don't pay national insurance. Now, I think it's intensely destabilising to have this long period of uncertainty before a budget. How do people as individuals or as businesses plan with so many known unknowns to deal with? A friend of mine who's an IFA, independent financial advisor, was saying that one of his clients had, against his advice, withdrawn all his cash from his pension scheme so as to beat any restriction on tax-free cash. And now that money is now sitting in a current account. So governments say they want us to invest pension assets productively for the long term, but the actions they're taking are actually making the opposite thing happen. And how might you plan recruitment to a limited liability partnership if you don't know what a remuneration package will look like after the budget? It's perhaps this uncertainty that's part of the reason behind the really sluggish 0.1% growth in the third quarter. We need to get back to a period of purdah before budgets, where government keeps their plans on ice. We need a competent, confident government that doesn't need to rule by focus group.